Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, it's the last pod of the year. Can you believe it?
I know, and I was just trying to work out what episode it is, but I think we're on 77, season 9?
76, I think.
77, because we've got the Devon one coming up before.
Yeah, you're right. You're right.
77. Yes.
Yeah.
So, can you believe it? Season 9, 77 episodes, Curtis.
10th anniversary next year.
Yeah. What we're going to celebrate it with? We'll see.
Well, that's a very good question. We will mark it, won't we? We'll do something.
We'll have to, but I mean, let's celebrate a shout out a different way today, because we have got a legend of the industry and a friend of the podcast who has decided to retire.
Yes. Yeah.
So
Andy the Gaffer Condy.
Yes. So many you'll know Andy. He's the legendary auctioneer for Mannheim Auctions, whose career spans 40 years. And he's now had his last auction, which was on Thursday of this week over at Mannheim in Manchester, which has obviously concluded his career. And can you guess how many cars that is, Curtis?
Well, I actually know the answer to this. So over his career, he's estimated that he's been involved in the sale of 250,000 cars, which is absolutely amazing.
Yeah, and always done with some style as well. Yes. with Secondi there. So like I say, he's done a lot. There's been a few stories about his time and his full career. This week he has shared a thank you video through his social channels that has been getting some good pickup in terms of what he's been saying and how he got into auctioneering and his career, and who he thanks for helping him through his career. But I think we know that he started as an estate agent before his first automotive job, which was back in the 1990s at Central Motor Auctions, before it became Mannheim. So and obviously from there he then set up the Cox Automotives Auctioneers Academy, which is a rigorous training scheme for the would-be callers. And, I think a fabulous career that he's had there, hasn't he?
Yeah, definitely. And, I think in one of the reports I read that, and he was saying his role as an auctioneer will, it had that sort of sense of event. I think this was one of the comments about Andy made by someone else. His role as an auctioneer had that sort of sense of occasion, sense of an event that he brought to every auction. And he's done an incredible job over the years. And as you say, a friend of the pod, because he has co-hosted a number of shows over recent years, hasn't he?
He has, yeah. And he has reached out that he wants to come on the podcast, and so I think we the plan is at some point we will get him on and probably talk through his career a little bit more in person with him, and to see what he's been up with, and hopefully he's going to manage to get a little bit of downtime and enjoy his time with his wife, and I suspect he'll get a few holidays booked in as well through this sort of next year, I suspect, for knowing Andy.
Yeah, no, definitely. So this week we've got a few headlines. We've also got a couple of guests. So starting with Darren Martin from Cap HPI, who we spoke to this week. There's a standalone podcast, but we'll have an extract in this show with Darren talking about what drove the 2.1% dip in used values over the course of December. And it's a fascinating conversation that we had with Darren, because he does actually sound quite sort of upbeat about the way the sector's performing at the moment, and certainly going into January.
No, I'd agree with that. I think it was referencing the sort of, again, further drop in inflation. There's a lot of talk around base rate, whether it'll increase, decrease, what's happening there. But I think his general feeling was a little bit more optimistic around the stabilisation of the market on the back of what he described as a realignment, and certainly not a crash.
Yeah, definitely. And this week we're also joined by Stephen Whitten for the last Menable Moment of the year. So no surprise, and no spoiler alert needed, because there is a seasonal element to this week's Menable Moment. Headlines this week come from Car Dealer, AM and The Telegraph, starting with Embattle's Cazoo comes under more pressure as it searches for fresh funding, and could Looker's acquisition fall foul of takeover panel rules after a wave of potential job losses? Audi hits the brakes on EV rollout as enthusiasm wanes. We'll ask what that will mean to the ZEV mandate from January. And the Ford Fiesta named as Britain's most financed used car of 2023 as the cost of living crisis bites. But before we look at those stories, here's an extract from that interview with CAP HPI's Darren Martin, looking at how used car trade values performed in December.
And I mean, in last month, you talked obviously about some of the tough challenges around SUVs that were taking place in November. What's that like in December? I mean, you and I remember the days when you'd had true seasonality, didn't you, with convertibles and 4x4s, which has kind of disappeared over time. But how have the SUV sector performed through December?
I'm too young to remember that. Yeah, they're definitely. It used to be when it was a proper 4x4, you'd have a not actually that long ago, was it really? You'd have an uplift going into the winter, but sort of half the vehicles are SUVs now, aren't they? So we've seen a 2% drop for SUVs, so pretty much in line with the overall market. Smaller SUVs and medium have been affected a little bit more than larger ones this month. So, but nothing sort of particularly stands out apart from. I think the interesting thing that we've seen is hybrids has seemed to have come under a little bit of pressure, not just in SUVs, but that's one of the standouts here. But SUVs have pretty much gone in line with the market. The biggest drop this month has been for MPVs. So those multi-purpose vehicles, they've been affected the most. They've come down 2.7% at 3 years. So there's been some difficulty there. And again, so the hybrid in that area have struggled. There's more of those coming back into the market, and prices of those have held up the best all year in PV. So now maybe they're a little bit overpriced compared to SUVs with the hierarchy. So although they're cheaper than SUVs, maybe they're just not far enough away, so they've been affected a little bit on price. And there's been plenty of cars sold by vendors out there that have been at very low percentage of cap, which has meant that drops have come.
Yeah, I was going to ask if there was any other. I mean, I presume in terms of other sectors. Then, do you think that the MPV? I mean, the MPV has had a bit of a roller coaster, hasn't it, through the last few years. I mean, it was fairly slow to pick up, and then it kind of recovered very quickly. You better go out and get your cheap Zefiras again, Curtis.
Yeah.
I mean, is there anything? I mean, do you think this is now that some of the fuel type is driving some of that strength and weakness by sectors now? Then, by the sounds of it.
Yeah, I mean, you're right. MPV has had a roller coaster ride, hasn't it? Really, since COVID, we kind of thought its demise was there, and then COVID came and it kind of almost backed that up because of sort of social distancing. And then after that, the staycation market meant that it was buoyant again, and not many manufacturers are making them. They're all making SUVs. So we've seen some really strong values. I think the cars that are still the highest above where they were 3 years ago are I think the Peugeot Traveller, and the Citroen Space Tourer. So cars that wouldn't necessarily think had gone up by that much, but they're 50% expensive than they were 3 years ago. So maybe they do need to come down a little bit more, but obviously volumes are less. So we've had in the past, V-Class has been one of our big risers, and that's come down 5% this month. So maybe they're just kind of realigning a little bit there on the MPV side, but it's not necessarily a longer term trend. Say there are some cars that are being sold quite cheaply at the moment, and that's what's driving the market down. On the SUV side, again, they've done okay SUVs, but devil always in the detail, and there'll be some that have dropped by more than others. And as I said, it's the plug-in hybrid, like the MGHS, Citroen C5 Aircross, and Cupra Formentor. They've been the ones that have dropped by the most this month. So yeah, they're the ones that stand out, I guess.
So as you said there, Curtis, I mean, a great chat, very upbeat, Darren there. Obviously, the interview was shared on Friday of this week. So if you haven't listened to the full interview, then we would urge you to have a listen to that interview with Darren. And as we said on the interview there, that the full editorial with the full details and a little bit more in depth of what has gone on in the month of December is available through the CAP HPI website or through the social channels on the 27th of December, which is this coming Wednesday. So look out for that. So this is kind of early indication of what to expect in that editorial, which is due out a little bit earlier than usual because of the Christmas period break.
Yeah, and as ever, it's worth listening to the full interview because, as Darren often says, the devil is in the detail, and there was a lot going on in December, and he does go into a lot of detail by age bands, by fuel types, and vehicle sectors as well. So plenty to talk about there. So do catch that on your podcast feed.
There is, unfortunately, always a fear as we're going back down again, Curtis. But
I know. It was a bad month for MPV, wasn't it?
It was. I mean, let's go over to the first story of this year, and I don't know whether it's the last time we're going to hear about Cazoo in 2023. I presume it will be now, but let's see what happens in 2024. But heading over to AM Online there, that Cazoo could fold through lack of fresh funding. And this is saying that cash-strapped online car retailer Cazoo must urgently secure additional capital before the second half of 2024 if it is to keep afloat. And this is in a US regulatory filing on December the 18th of this year, that the company stated that it may need to make substantial adjustments or potentially cease operations altogether if it fails to secure adequate funding. So the pressure is on following a bit of restructuring, Curtis.
It is, yeah. And whenever we talk about Cazoo, I always get a sense that they operate on a sort of faster timeline than anyone else, because there's been a lot of news stories about Cazoo just over the last few weeks, and some of them have been pretty major. We reported earlier in the month that founder Alex Festman had exited the company, and accountant Tim Isaacs is now chairing the business. And that followed the announcement that it had completed its debt restructuring. So this is only 2 weeks ago, but already that sounds like a long time ago, doesn't it? Because that debt restructuring was pretty major, because it resulted in a reduction of debt from $630 million to $200 million. But this week we've got this latest update, and within the piece they actually quote the regulatory statement quite closely. And one of the quotes says from Cazoo says, "We have limited liquidity and will need to raise additional capital before the beginning of the second half of 2024 in order to satisfy our liquidity needs going forward." So that's pretty blunt, isn't it, Phil?
Yeah, it is, and within the story, talking about that, the cautionary statement follows Cazoo's recent announcement to have completed that restructuring. I mean, a reduction of debt from 630 million to 200 million. Yeah, there's you just I don't know, Curtis. I mean, we've talked about Kazoo a lot on the podcast, and it does seem to be continuing, doesn't it? That they're there on the edge every single time at the minute. But I don't know, how long can this go on for? In terms of that stock market and operating in what is going to be a challenging year still ahead.
Yeah, definitely. And it's worth reflecting that the business was only launched in 2019, and they've packed a lot into those 4 short years, haven't they?
Yeah, just a bit. Yeah, yeah.
Never a dull moment.
Never a dull moment. It'd be interesting. We better get back to your dry whiteboard, Curtis, your whiteboard, and do the Kazoo story that you've done. And it'd be interesting to see how many headlines they've grabbed over that period as well, wouldn't it? That's they've certainly been an interesting one for the sector, and spurred on lots of conversation and debate. And it is going to be, I mean, you just hope that it does survive. You hope that there is light at the end of the tunnel. You hope that Jonathan Dunkley manages to turn the business around and they make something of it, because it would be a shame. I mean, you don't like to see anybody leaving the sector, and whether we like it or we don't, I mean, they've certainly had an impact on the sector.
Yeah.
Whether that's what to do or what not to do, many may argue, but certainly they entered at the right time. It spurred on the market. It spurred on a lot of the other operators within the sector as to what they were doing it and how they were doing it. And whether we agree or disagree, there's probably significant changes being made with other businesses just on the back of Cazoo entering the sector.
Yeah, I think you're right. And a lot of dealer groups and some of the car supermarkets as well have upped their online game as a result of Cazoo launching in with such a big fanfare when they did launch back in 2019, and the presence that they had in the sector. So the probably an unintended consequence, but certainly a positive one for the sector overall.
And sticking with dealers, but heading over to car dealer, and a fascinating story that they've picked up over at car dealer with this one. But Lookers, could Lookers acquisition fall foul of takeover panel rules after a wave of redundancies? And this saying that bidders for public companies must lay out their intentions for post-sale changes clearly in offer documents, and that the takeover panel can investigate if changes differ to those laid out to the shareholders in advance of the sale, and that Lookers and takeover panel both refuse to comment on whether there is a potential for investigation. Now, this is, I mean, we've got to stick to the details on this one, but it's a fascinating one, this one, in terms of looking at this Rule 2.7 announcement on the London Stock Exchange.
Yeah, it's a good piece of investigative journalism there by James Baggett, because he's looked very closely at the implications of Rule 2.7 and what it means to this deal with Alpha Auto, the Canadian group, acquiring Lookers earlier in the year for £504 million. And what the story looks at is that Lookers initially said around 3% of its 6,500 workforce, which is about 200 jobs, would be at risk, would be made redundant as a result of the company delisting. And these jobs would be mostly affected would be head office, dealing with corporate and support roles. And as I say, that's really following the delisting. But the story goes on to look at what's actually happening now, because the redundancies seem to have taken on a bigger scale. So the story reports that so far around 1,000 Lookers staff are at risk of losing their jobs, with roles being cut from sales teams, including business managers and servicing departments in the group's 160 sites. So that's outside of that delisting remit. And Lookers has actually confirmed to Car Dealer that staff are currently being consulted on the redundancies, and has actually admitted that as much as 10% of the workforce could lose their jobs.
And the story does go on to say that the takeover panel has the ability to investigate the information revealed in a 2.7 announcement, and if it is not satisfied enough that the details about the change of the post-sale have been included, can apply sanctions. And these can range from a private reprimand to a public announcement on its findings. So Car Dealer did contact the takeover panel, but it said that it does not comment publicly on its investigations or whether they are live or not. It said that private reprimands are just that and not made public. So, as you say there, I mean, it'd be interesting when something does, and if something does come from this, and if it is public announced, will be very interesting. But it is a shame what has been happening, because we know other dealer groups have been reaching out, haven't they, on the back of this?
Yeah, definitely. So I noticed on social media, David Peel, who's the CEO of Pentagon Motor Group, he took to Twitter, or X as I suppose we're supposed to call it now, during the week to just flag up that if you are affected by the job losses, to get in touch with Pentagon. And there were similar postings on LinkedIn from Marshall Motor Group, Big Motoring World, and indeed Julian Stockton, friend of the pod at Angus McKinnon. So there is a lot of uncertainty around this, and jobs at risk. And it will be a shame to lose these people from the industry. And it's great to see the industry actually rallying around, saying, well, talk to us. We might have some openings. We might have some opportunities.
Yeah, not a good time of the year either, is it? For this kind of, whether it's something does or doesn't happen, it's still not a good time of year to be having these kind of conversations. So we do wish you all the best if you are having these kind of conversations at this time of the year. So up next is a bit of a seasonal message from our very own mental wealth guru, Stephen Whitten.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Menable moment, looking at mental wealth and well-being awareness and best practice in the automotive sector, with me, Stephen Whitten. Hi guys, hi everyone. Yes, it's the last Menable moments of 2023, and wow, hasn't the year whizzed past, and hasn't a lot happened and a lot been achieved? And I hope you're looking forward to going into the new year. But in the meantime, taking a break and having a bit of a well-earned rest. As you can probably tell from the voice, I'm still trying to recover from this lurgy that's been going around. And I've got to say, I think a bit of that might have been partly overdoing it over the course of the sort of last month or so. And that's my body's way of saying, well, you've got nothing in the diary now for a couple of days, have that. So I hope that you've managed to avoid it as well. So it's because it's not pleasant. But anyway, just wanted to do a final little roundup. And, this year we've talked about a number of things. And going into next year, we are going to be even more intentional. We've got a lot coming up that we want to help the industry with. And one of the things I wanted to talk about today is the subject of role models. Now, I don't know about you, but if you look back over your career, you'll probably identify one or two, maybe if you're lucky, people that really were role models for you, that you looked up to and that you considered were people that sort of helped you in your career and where you went. And I think now more than ever, we need to be in a position where we have role models and that those role models are readily available. Now, the Christmas period obviously is about celebrating role models to some extent. I'm sure you'll bear with me on the link, but whatever your beliefs are around Christmas and why we celebrate it and all the rest of it, it is ultimately about role models. And I wanted to just mention that in 2024, we're going to be doing some stuff around that, and particularly around helping managers and leaders to be the people that their teams need them to be. And just through the people that we're getting reaching out to us recently, and I know that equally Ben are still inundated with people that need help. You know, I think an injection of a role model and role modeling behaviours in some of our businesses would be a great thing. We've still got lots of uncertainty, lots of insecurity, lots of stuff going on. We've got, you know, big news about redundancies happening and all that sort of stuff. So, you know, to take that into the Christmas period, you know, is going to provide some time of reflection, but also quite some stress and insecurity for some people. So, as I've said before, keep an ear out and a lookout for them. But have a little bit of a think about what you can do to be a bit more of a role model, more than you probably already are. And I know that I'm preaching to the choir in some instances, because listening to this podcast right now are some amazing people across our industry, and you really already are role models. So just keep that in mind. If you want to have a chat, as always, give me a shout, stephen.witten@menable.org. And let's work on some role modelling. And it doesn't have to be anything tremendously heroic. It just has to be something that's about being the best version of you for the people around you. And quite often when you speak to anyone who's gone through any kind of challenges or mental health issues or anything like that, they often say when they come out the other side that they want to help other people, and they want to be the person that they needed to reach out to when they needed help. So that's a role model. That's somebody who's there and inspires and helps other people to make their way through the day. So, in the meantime, have a great break. It just remains for me to say a massive thank you to you, Phil and Curtis, and the team at Motors for continuous support and looking out for us and enabling us to have this platform and to share some thoughts with you every other week or so. And of course, to everyone else that we've worked with through 2023 and our role models and the people that we see as our mentors and look up to. You know who you are. I don't need to give any more shout outs because we've all messaged each other privately. But have a fantastic Christmas break, and we look forward to seeing you in the new year.
Well, no singing this week, Phil.
No jingle bells, no singing.
No
poignant
Christmas
role models. No, probably one just to leave people thinking for the Christmas period, and probably as people look back on 2023 and they look forward on what to do differently or do the same in 2024, I suspect. But again, I suspect you are listening today, Stephen. From Curtis and I, thank you for everything you've done throughout 2023. Thank you for giving us something to think about on a fortnightly basis through the Menable moments, and we look forward to hearing more from you in 2024.
Yeah, definitely. And as Stephen said, if you want to get in touch with him, you can do so online at menable.org, or you can email him at stephen.witten@menable.org, and it's Stephen with a PH, or you can find him on LinkedIn. So, do reach out to Stephen. He'd love to hear from you. So back to the headlines. So next story is from The Telegraph. And the headline there is Audi hits brakes on EV rollout as enthusiasm wanes. Well, that kind of
that's a story,
that's a story, doesn't it? Yeah. It's quite an interesting piece, this one. And if you can access The Telegraph, it's definitely worth heading over there to check out the full story, because it is quite detailed. But it's based on a report in Bloomberg News. And it does quote the boss of Audi. So it does say that Audi will hit the brakes on the rollout of electric car models as this consumer enthusiasm wanes in the face of, guess what, high prices compared to petrol models. And he does quote Gernot Dollner, the boss of Audi, and he says he wants to avoid flooding dealerships and factories with the vehicles as sales slow. So an interesting strategic move here from Audi, and one that, I mean, let's face it, we could see other manufacturers, certainly within the Volkswagen Group and outside of the Volkswagen Group, following suit if this does go into the new year, which looks most likely. And I guess what's particularly interesting for the UK is how Audi UK will respond to this, because we've got the ZEV mandate coming into force from the 1st of January. So they will need to sell at least 22% of their vehicles over the course of the year will need to be EVs. So if the factory's producing fewer EVs, does it mean that they will be coming to the UK rather than being distributed throughout Europe? So there's all sorts of plates spinning in the air on this one, isn't there?
There is, yeah, and like I say, it's a great story here in the Telegraph, because they refer to the official forecast that for electric car take up in the UK were slashed by almost half last month, saying that sales of new battery-powered cars were expected to grow steadily until they accounted for 67% of the market by 2027, under a prediction that was issued in March. But that figure is now being revised down to just 38%, and this is by the OBR, the Office of Budget Responsibility, which said that the take-up of EVs has been slowing. And there is, they're referring here, obviously, that electric car sales in China could reach 90% by 2030. So the likes of Audi and other operators and legacy OEMs, they are facing significant pressure now from the Chinese manufacturers that are entering the market with some speed and pace. But in a market that, as you said there, Curtis, is still fairly challenging from an adoption perspective.
Yeah, and the graph that they run on that, the adoption of EVs in China, I mean, it's staggering, isn't it? Because the line from 2023 to certainly 2027, it's almost vertical. I mean, it just does accelerate, and to reach 90% by 2030. So, China obviously looking at Europe very closely. And if Audi does pull back on EV production and sales across continental Europe, then that there will be opportunities for a lot of these emergent, new entrant Chinese brands specializing in EVs as a market leaders starts to pull back a bit.
Yeah, and I mean, as you said there earlier in that story, that as particularly for the UK, as we enter the ZEV mandate, we know that the rules of origin has now been deferred around that tariff of import-export into the UK, and Europe has had a 3-year deferment. But we're still facing the ZEV mandate, particularly in the UK, and a lot happening for these manufacturers. And like you say, it's still very unclear as to where the manufacturers are going to focus their intentions and where that's going to go into Europe or other areas of the global automotive sector. So I think it's certainly going to play out, be quite interesting. And it's when we had that interview with Darren Martin this week, he did refer to 2024 with everything going on as to it's going to be another interesting year, particularly around the impact on values. To what's going to be happening with things like the ZEV mandate and EVs in general. So it's one that we're going to be watching very closely.
Yeah, and I guess one thing is for sure, the supply of new cars, certainly in the first quarter of 2024, is going to be pretty good, isn't it?
Yes. Yeah, there's going to be a few about, I suspect, but yes. We'll see. But I think, Yeah, we'll see what happens. And heading over to a slightly lighter note story, just to finish 2023 off, and today's podcast is heading back over to car dealer. And this is that the Ford Fiesta is Britain's most financed used car of 2023 as the cost of living crisis bites. And this is that the Ford Fiesta was the most financed used car in the country this year. Models beat the Volkswagen Golf in the list, and this was researched by Close Brothers Motor Finance, and saying that experts say cheaper models are now being financed more due to the cost of living crisis. So, we know that the Ford Fiesta is it's always dominated the new and used charts, hasn't it, through the decades there, and now they've stopped making it. So it's great that we've got a story about the Ford Fiesta, Curtis.
Yes, yeah, definitely. According to the research, 70% of Close Brother Motor Finance's dealer partners said that customers have been looking to buy cheaper models this year. So no big surprise there, because with the cost of living crisis, high inflation, high interest rates, there's no surprise there that customers are looking to maximize on what they buy in terms of a used car. Hence the enduring popularity of the Ford Fiesta. And regardless of it going out of production, it's still going to be a major used car seller for many years to come, isn't it?
Yeah, definitely. And we couldn't finish this year off without giving Curtis a top 10 to finish the year off in style, Curtis. So do you want to give the top 10 of the most financed used cars of 2023?
Okay, so at number 10 we have the Range Rover Evoque. Number 9, the Nissan Qashqai. Number 8, the Vauxhall Corsa. Number 7, the Mercedes C-Class. Number 6, the Mercedes A-Class. Number 5, BMW 1 Series. Number 4, the BMW 3 Series. Number 3, the Ford Focus. Number 2, the Volkswagen Golf. And sitting there at number 1, the Ford Fiesta.
We needed some of this chart countdown.
Yeah, we do.
For this, then, maybe that's what we do next year. Do that chart. That some people won't really know what we're talking about there, will they, Curtis?
That they won't know who Alan is.
Sunday night top 10 charts. Yeah. Exactly. I mean, a great, finishing the year there, some from, last minute activities right up to the wire, as we knew would happen there. And as always, we've tried to cover most of the stories on our weekly podcast. And, we always say head over to some of those media channels that we talk about, it's Car Dealer, Motor Trader, AM Online, or some of the bigger nationals such as the Telegraph, Financial Times, etc. Because there's always a lot happening for the automotive sector. But we do try our hardest on a weekly basis to pick the main headlines and give you a bit of a mix of what's been happening in the week, just to give you some insights to some of those big stories and big activities in the automotive sector.
Yeah, and all the stories that we've covered today, and indeed every week, will be in our newsletter that goes out every Monday morning. So if you want to take a deeper dive into any of these stories, then do look out for that. But you know what, Phil, that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until Saturday, the 6th of January, it's a Merry Christmas from me.
And it's a Happy New Year from me.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.